The JSE's diversification strategy is paying off. The bourse says increased revenue from its non-trading business segments helped support a robust year-end performance and helped protect operating income from a year of muted equity market activity. The JSE's posted a 10% rise in net profit after tax. It's added that the business remains strongly cash generative, and this allowed it to declare an ordinary dividend of 828 cents. That's nearly 6% higher than the prior period. A solid showing across all its units has given Aspen's half-year performance a boost. The pharmaceutical giants posted a near 4% rise in revenue, while headline earnings grew by a similar margin. Aspen's pointed in particular to a strong performance by its commercial pharmaceuticals unit, which benefited from the product portfolio acquisition in Latin America, and it cited improved profitability at its manufacturing business. Santam has reported higher full-year earnings. As the various underwriting measures the insurer implemented in response to difficult global operating and risk environments improved profitability. A final dividend of R9.85 has been declared. This reflects a 9% increase on the previous period's payout. Looking ahead, Santam says it continues to make progress in rolling out its Future Fit 2030 strategy. It believes the approach will allow the firm to continue to be profitable and achieve strong growth for shareholders. Decent, that's how Bidvest has described its half-year results. Revenue rose 6%, while headline earnings per share ticked up 3%. A dividend of 470 cents has been declared. This reflects a slight increase of 1%. Bidvest says trading conditions are constrained and rapidly changing, and so the diversified industrial company will focus on being nimble in the current environment. RCL Foods has reported higher earnings at the halfway stage of its financial year. The food producer says this is thanks to gains at its groceries and baking divisions. A dividend of 20 cents per share has been declared. The owner of brands such as Nola and Catmore says it is cautiously optimistic about its second half performance. The group believes consumers will remain under pressure, but plans to execute its growth plans while enhancing margins as a way to offset the impact of any shortfall in volumes. A stronger performance in the second quarter helped Italtal lift headline earnings by 4% during the firm's half year. The company came under pressure in the first 3 months of the year. That's as consumer confidence and spend in the building and construction sector remained subdued due to high interest rates and inflation. But in the second quarter, sentiment turned more positive thanks to the formation of the Government of National Unity, and consumers benefited from 2 interest rate cuts and payouts from the 2-part pension fund reforms. This helped boost sales, but Italtal says the improvement is tenuous as consumer spend remains constrained. An ordinary dividend per share of 28 cents has been declared. PPC's turnaround plan is yielding results. In the 10 months to end January, earnings before interest, tax, depreciation and amortization rose 20%. The cement maker says this is due to all business units improving. The trading update also shows that PPC expects capital expenditure to come in slightly below guidance. That's as it reassesses where money is being put to work. South Africa's manufacturing sector is under pressure. The Absa Purchasing Managers Index declined slightly to 44.7 points in February as demand softened and production slowed in response to persistent cost pressures, fragile global trade and local logistical challenges. This 0.6-point decline marks the PMI's 4th consecutive month of contraction. According to Absa, the print reflects subdued activity in the manufacturing sector, which has yet to recover following its weak performance at the end of 2024. Economists have warned that a meaningful recovery in manufacturing will require stronger domestic demand, improved logistics, and a more stable cost environment. In international news, Italian luxury fashion brand Prada is nearing a deal to buy Versace from Capri Holdings, a high-end fashion conglomerate, after reaching an agreement on a purchase price of approximately $1.6 billion. Here's more detail in this report.
Prada is getting closer to a deal to acquire Versace from fashion group Capri Holdings. That's according to weekend reports by Bloomberg. It says a price of about $1.6 billion has been agreed. The report says Prada and Capri, which also owns labels like Jimmy Choo and Michael Kors, could now agree a deal in March. Talks are reportedly progressing after a due diligence process failed to show up any risks. Experts say owning Versace would allow Prada to target a whole new range of customers with tastes far removed from its trademark minimalism. There was no comment on the report from any of the parties involved. Last week, Miuccia Prada, the owner of the fashion group that bears her name, said numerous other companies were interested in acquiring Versace. Italian media reports say Renzo Rosso, founder of the fashion label Only the Brave, is among those interested. In February, Reuters reported that Prada had been given preferential access to financial data on Versace after it was put on sale. Capri bought the fashion house in 2018. It's been working with the British bank Barclays to find a buyer.
And Honda has opted to manufacture its upcoming Civic hybrid model in the U.S. state of Indiana rather than Mexico in order to sidestep potential tariffs that could impact one of its best-selling vehicles. Let's take a look.
Sources say Honda has decided to produce its next-generation Civic hybrid in the U.S. state of Indiana. The switch from Mexico is to avoid potential tariffs on one of its top-selling car models, the people familiar with the matter have said. The change underscores how manufacturers are scrambling to adapt to U.S. President Donald Trump's proposed 25% tariffs on goods from Mexico and Canada. Several automakers have expressed concerns about the levies, but Honda's reported move would be the first concrete measure by a major Japanese car company. The sources said Honda now plans to build its new Civic model in Indiana from May 2028, with an expected annual production of around 210,000 vehicles. All of those speaking to Reuters requested anonymity, as the information has not been made public. A Honda spokesperson declined to comment on changes to the Civic production plan. Mexico has long been a lower-cost production hub for Japanese and other global automakers. Honda sends around 80% of its Mexican output to the US, the world's second-largest auto market after China. It warned in November that it would have to think about shifting production if the US were to impose permanent tariffs on imported vehicles. Honda's case underscores how potentially disruptive the US tariffs would be for industries that cannot drastically alter production plans in the short term.